Good evening, everybody. Having a nice, pleasant summer type evening here in Pittsburgh. But no baseball. No baseball. Man, oh man. All right, we got to, let's see, kind of doing the cliff note. But people asking what is involved in this coming weekend, Saturday, where 2 weekends ago we showed how to identify where high probability breakout situations are likely to occur with the candlestick patterns and signals at important technical levels. So then we were doing that just to get everybody acclimated to identifying where a breakout could occur. And then what we're going to be doing is showing how to enhance the returns of a big price move with different trading strategies. So here are the breakout factors that enhance the probabilities of seeing a breakout based upon candlestick analysis. First of all, we look at what the market conditions are. Obviously, if you're in an uptrend or in a steady sideways trend, a lot of breakout patterns are more likely to occur because there's less investor fear factor that there might be selling. Then we look at observable resistance and support levels, and in this case we're going to be looking at resistance levels because essentially what we're looking for is where is everybody else watching, but we have a little bit of an advantage. We can see what type of patterns, candlestick patterns are bringing you up toward that, I didn't want to do that, toward that breakout level. And then a few weeks ago, as we saw, we made some good profits on the airlines because the whole sector was confirming and they were breaking out. So when we can see when a pattern breakout is about ready to occur, then we can figure out the different strategies. And this is one of the things we're going to be going through. Do you want to be buying calls? Do you want to be buying a combination of stock with calls? Do you want to be buying a combination of calls with spreads? Or do you want to be doing a combination of calls with maybe a credit spread? What we're going to be essentially doing is taking the analysis from what everybody kind of assumes or everybody anticipates, that if a stock's going up, you buy the calls. Well, that's probably a very low percentage, low percentage application. The combinations are much more strategic as far as enhancing the probabilities of making much bigger profits with a big profit trade. And then we're going to show how to apply those different strategies. So the first thing we do when we wake up is see, what does the market look like? Is it rolling over? Does that mean a breakout is likely to occur, which is going to be much different than analyzing a market condition like this? So the rhetorical question is there a recording available for Tuesday's class on setting stops? Jake, yes. Just email Abraham at Candlestick Forum. So this is just kind of the basic rhetorical question. Where are breakouts likely to occur? They're usually at technical levels that everybody else is watching. And those technical levels could be resistance levels like trend lines or moving averages. But we have a great advantage. I say we. As a candlestick investor, I was always flopping around before candlesticks came along, And I would hear all these other people saying, man, I made some big profits in XYZ, or I killed it on such and such, it broke out nicely, and I'm thinking, why the heck can't I ever find these big breakout moves? Well, then when I started looking at candlestick analysis, through the years I've discovered there's definitely ways that you can get ready for a big breakout move by knowing what the pattern is and what's happening right before a resistance level. So as you remember, not too long ago we were recommending 10. And this is where I call this 2+2 or convergence analysis. Look where our doji best friend gap occurred. Right here at a resistance level, kind of giving us a double bottom, fry pan bottom. What's our normal strategy? We're trying to find buy signals in the oversold area. Where's the breakouts likely to occur when stochastics are already up here in the overbought area? So it's not that we're now shooting from the hip trying to get lucky. We can calculate where a probability of a breakout is likely to occur, and we can see what happens when we identify it. So if we can see breakouts occurring at moving averages or resistance levels, we've got an advantage of knowing when to be buying as it breaks out. So if we can see on this chart where we had a fry pan bottom, T-line crunch coming right up to a resistance level that acted as a resistance level before, we know what to be doing right here at this area. We can put on a strategy where the next day we might be buying calls. And then the next day we might be putting on spreads because we've already got huge profits in the calls, and we can enhance those profits by putting on a spread, which is a lot less exposure and still giving you a lot of upside potential based upon the confirmation of the pattern that we were expecting to happen at a breakout level. If we're looking at J-hook pattern bobble breakouts, we're going to be able to identify what type of strategy to put on right here, or, this is not a good one to, there's been times where if I see a setup like this, I know what the risk-reward factor is. I can be buying calls on the close, because what was it telling us? They were still nudging up that if this opened positive, I already have a good profit in those calls. Now, this is where the risk-reward factor becomes each person's individual calculation or comfort level. Is sometimes I'll, depending on what the market conditions are, I'll buy calls going into the close because it looks like the market's going to act strong the next day. What do I give up if I wait till the next day? Well, gapped up and started trading positive immediately. What I might have been buying here for $2.30, I might now be paying $2.80 up here. So that's part of the risk reward. What do we see as far as the setup? What are the market conditions? What's our risk tolerance? We also can identify when there's been a major change of a big breakout, like a fry pan bottom. And not necessarily a fry pan bottom. Look at the nature of the trading here. That was just bleh, nothing. And look what that candle told you. That coming out of this fry pan bottom, indecisive trading for months, now something has happened. That is the alert. Now, a lot of people say, well, a lot of times we see a big spike up, the next day it opens lower and comes right back down, and we're at a loss. Yes, that will happen, but the probabilities improve dramatically when you can identify that there's a pattern breakout. That improves your probabilities. And we've seen this one. Everybody in the chat room's been talking about this one. But here's the other aspect that we want to know what to do when you see a breakout situation. You've got a stock that went from, I forget what it was, like $1.50 to $35. When it gets up here, what's our trading strategy? Very simple. We flip to the 10-minute chart, and where is the T-line on the 10-minute chart? Where would be our first place to start taking profits? Right here. Or if we want to do something quicker, you flip to the 5-minute chart. So here's one of the rule of thumbs that I've discovered through the years, that if you've got a strong move, strong move, strong move, what makes it a pattern breakout? What makes it a pattern breakout? The fact that you probably would have made this a little bit bigger. There was a gap up or a little bullish candle here, and then another big bullish candle. That was your breakout, because I could have made this bigger, but I wouldn't have been able to get the whole price in. That you saw buying coming out of a stage where there was no real activity. That becomes your candlestick alert. And this one's hard to see on this one. Carol, got plenty more. But if it's gone up so much, I mean, if you found a stock that you were paying $3, $5, $7 for, and the next day you could get out at the $35 level, most people spend a lifetime trying to own a stock they could buy at $7, and 2 or 3 years later be able to sell it out at $35. We've got a very distinct advantage of seeing that investor sentiment works the same way, whether you're you want to sell. When it gets up that high, you want to put that money in your pocket. The rule of thumb for me is, if the first selling that you see, you start taking profits. And that's whether you're trading on a 10-minute chart in soybeans or crude oil. That first initial run, when they start taking profits, that's where everybody starts taking profits. So if the 10-minute chart is even too slow, you can flip to the 5-minute chart. And as you can see, the first real sell signal is right here. That's where I'm at least starting to close out at least half the position, if not the whole position. On the other hand, if this stock, as we saw, or any stock, has just produced a huge profit, again, most people wait weeks and months to have huge profits in something. You close it out. If you miss the initial move, do you use a pullback to the T-line as an entry point? Yes. But if I've got a stock that, in this case, moved like this, and I'm able to get out up here, yeah, I'm happy with that. Now, if I've got one that's moved up moderately and it might pull back, yeah, you start looking to see if it's pulling back to the T-line. So the reason we can point out where a breakout is occurring, because we can visually see. Our recommendation this week on LVGO, was it? No, it was yesterday. Was based upon, look at your fry pan bottom, look at your little gap up through the resistance level, and then it opened positive. What was it telling us about our breakout? It was still moving in the right direction. Even though it came back and closed as a doji yesterday, what else do we know about our signals or patterns? We knew that if it opened positive, it was confirming our breakout with a doji sandwich. This produces a kind of a logical option trading strategy. If I was buying the calls on this day and it pulled back and I was a little bit nervous and held on to it because I needed to see a bullish trading day the next day to make my calls work, that if it started trading positive the next day, now I know I've got confirmation that we're going higher, maybe in the magnitude of this wave right here. Now I go to my next step, which might be, did I write it down or not? I didn't. Oh, I may have done it. Now I go to my next step. But if this starts trading positive tomorrow, confirming my doji sandwich, confirming my fry pan bottom breakout that's going to produce a very strong price move, now on top of my calls, I might add some spreads, which I think I did on this one today. I can't see. I bought the 75, I think I own the 70s, which obviously today had a good profit in them. But near the end of the day, I bought the 75 80s for $1.30. Because if this is confirming, $80 is not going to be an outlandish price move. And so that $1.30 with much less money involved has the potential of going from $1.30 to $5. Less money exposed. So these are the strategies we're going to be working on over the weekend or on Saturday of why we want to add some of these spreads or debit spreads, credit spreads as the price is moving. Because if they're doing what we expect on these breakouts, then we have less money exposed at higher prices, but the returns can be extremely strong. How far out do you go on your calls? Usually relatively close, meaning it could be 2 weeks, 3 weeks, 4 weeks, and it also depends on what calls you have available. Some of them you're going to have weekly calls available. Others you're going to have only the monthly calls. So you have to make your strategy based upon what you have available. So if I was, I can't remember what these were, but if I was buying, I think these were only monthly calls. So I had to buy the July 75 80. That's usually a little bit too far out, but it might take it may not be too long. It may take 2 weeks for it to move up into the 80 area. And by that time, your spread price is going to be fairly substantial. On LVGO, if it went back to the T line, it would be a good to get in on a stock where you may have missed. Jake, if you've missed a price move, why would you not want to be buying this if it came back to the T line? The whole point of identifying candlestick signals or patterns is it's telling you when the bulls are taking control and you've got a strong price move in progress. If it came back to the T line, what's it tell you about your strong price move? It's not very strong. You probably don't want to be in it. Or maybe at best it's just going to be a very slow uptrend. AB, that's what I mean. That's the whole process. That's why we've got a full day training on Saturday. Is seeing what is the best strategy for each price move based upon what is the confirmation of the breakout. Yeah, so that's the whole point of our training strategy. It can't be explained in a one sentence. It's what are the costs of the calls, where can they potentially go to, and is a spread combination, is a spread better or is a combination of the two better? Do you worry about implied volatility, the Greeks, or the evaporation of premium? No. The Greeks have nothing to do with candlestick patterns or signals, especially breakouts. The Greeks have nothing to do. What is your, what's the assumption? What's your Greeks doing based upon this type of price move. Probably not showing you anything that's going to be related to what this price move is going to be. And implied volatility means nothing either. We're buying the patterns. We're buying the information that is graphically given to us, showing us that there's been a whole new change or a whole new buying pressure or selling pressure. When you're deciding on whether to buy a stock or an option, is the bid-ask spread on the option an important consideration? Yes, Jake, and you have to go into a 30-second evaluation. Remember when they came out not too long ago and they weren't going to be charging commissions anymore? Well, if you look back, and after that point in time, you'll have seen that your bid-ask spreads on stock and options have widened, which basically means if they're bidding $2 for a option and they're asking $2.60, that's not the bid-ask spread. That's the bid-ask spread that that brokerage firm is showing you. More than likely, the market must be somewhere in between, around the 230. But you can't calculate. You don't know where it is. So essentially, you're taking a pot shot. So if I'm buying where there's a wide bid-ask spread, yes, I'm putting my bid in at 230 or even 220. Because that's probably where the market is. Now, just consider this. A brokerage firm that makes their money on executions, charging zero commissions, where do you think they're making their money? You're buying a bid-ask spread at $2 to $2.60. You decide, oh, I'm going to pay $2.50. Well, they just bought it at $2.30 and selling it to you immediately for $2.60. They've made more than their commission. Anyways, so that's why that'll be part of our training this weekend is if you're going to buy, put a bid in at a level that is the likely market. Don't you think the wider the spreaders now are somewhat caused by volatility? No. No, there's always a market for everything. Mike, do whatever strategy works. Yeah, so there is a lot of times where brokerage firms don't actually execute your trade. They sell that trade to somebody that does the executions, and they make their money selling that trade because whoever does the execution is going to make money on that trade. All right. Let's see. TDA. I bet you dime to donuts that their bid-ask spreads are a lot smaller. All right, Jake. Let me see. What was I? Oh, I got way off track here. So here is the advantage we have for seeing when a breakout is occurring and we're going to have another strong price move. Now, obviously, a breakout is at a resistance level that could produce another strong price move over the next 2, 3, 5 weeks, or sometimes they blast right up. The benefit, though, of that analysis is when you hit a breakout situation based upon a candlestick breakout, candlestick pattern breakout, you're putting yourself in positions where it could either go up like this or skyrocket. So every time we make a, let's see, I hope I didn't skip one here. Did I just do this one? I can't. They're all starting to. So we recommended NVAX because here's where you put 2 plus 2 together. There's your best friend gap up through this kind of wedge formation and can further identifying this fry pan bottom And then there's your doji sandwich. So you might be buying calls on this day, and as it's confirming the next day, we start adding spreads because we know the probabilities of it going much higher become that much greater, and so you've got less money involved with your expectation of percent return being much greater. That's true too. Well, no, that's still going against you, depending on where you're selling your options. Can the fry pan bottom and doji sandwich happen on the same trading day or in the same trading? Well, no, this is a pattern. The doji sandwich is just part of that pattern that's kind of confirming that the pattern is working. Hold on to your individual ones. I'll get to all the ones that are doing good pattern setups as we go to live charts. So we recommended this one the other day. Again, there's kind of your bullish confirmation, like a left-right combo, breaking the downtrend, starting your curvature to the upside. And what enhanced this one? There's your doji sandwich, still confirming your fry pan bottom. What scanner criteria are useful for finding potential breakouts before they break out? Usually you're going to find a pattern setup as it's developing. So on something like this one, where you can see the J-hook pattern setting up, if you cut the chart off right here, you knew that if it started trading positive going through this level, you probably have wave 3 breaking out. Now, obviously, you're putting the probabilities in your favor that the breakout could be huge in one day or could be big over the next 2 or 3 days. Do you primarily trade options over buying? Oh, it depends, Gary, on which accounts. I've got some accounts that are just stock trading accounts, and I've got a smaller account that I just trade options. From the fry pan bottom, can you say how far it goes up? Not necessarily, but it's usually a wave 1, wave 2, wave 3 could be the same potential as wave 1. But it's not necessarily the same on a fry pan bottom. The fry pan bottom is just a pattern that when it breaks out or it confirms, you're going to have an excessively big price move. Now, once that excessively big price move starts, now you kick into your other trading analysis of you stay long as it stays above the T-line, or you stay long until you see a sell signal that might create a J-hook pattern or your classic pattern. So once you're looking for a situation where you know you've got upside, a strong upside, then once the upside starts, then you go back to your other analysis of what might be happening. So right now, look at this one with a J-hook pattern. Wave 1 and wave 3 are getting to be about the same. So how long do we hang on to this one? Until we see a sell signal, which this might be a doji in the overbought area. So we also know where the logical stop losses are, or profit taking. Probably at the low of today's doji, because logic says if it comes back down through there, that was wave 3, it was time to take profits. Waves are just, Jeff, we just know from Elliott wave that prices move in waves. That's human nature. So we're not trying to learn Elliott wave. We're, well, and where do you start the wave? You don't really have to. Say, look how big this wave is from wherever you want to start it. That's usually about the same magnitude as this wave. So if this is the start of wave 3 or if this is the start of wave 3, it doesn't really matter, because the whole point of catching this price move is based upon identifying when the next wave is starting. Now you watch to see when it's time to take profits. On YY, it's a long way from the T line, yes. But we don't know whether there's another big move, another doji sandwich. So at this point, we're a little bit more cautious to see if there's any selling, we start taking profits. How can you find the patterns using TC2000? I think most of those formulas are in our little file that's way down on the right-hand corner. Do you start it from the beginning of the breakout of the fry pan bottom? Then again from the J hook? No, not that exact. If this was wave 1 starting up and I saw a J hook, just this would be wave 1. Then if it headed back up, wave 3 would be the same magnitude as wave 1. And it would be from, in this case, the start of the fry pan bottom. Candlestick scanning, okay, in the folder, all right. Okay. Oh, this was supposed to only take 20 minutes. So here's what we're going to be identifying. An aggressive trader, seeing that we did a doji right smack dab at the resistance level, might buy calls on that day. Versus if it does work and pops open, maybe you're having to pay a bigger price. And what do we know? What would not? The J hook of the J of a J hook pattern is wave 2. So what would we expect on this one? That if it opened positive, we got a doji sandwich. What would the doji sandwich tell us? I hope I have the next one. It would tell us that this resistance level is not acting as resistance. So if we were more conservative, maybe the following day we had to pay $370 or $390 for those same calls. So the risk factor is what everybody might be expecting. Now, why did I put this on here? Oh, so if we were buying the July 60 calls at $3.50 and it closed at or if we bought it on the next day, we had a pretty good profit in it. Now what? That's what we go through, that if we know that this is what our expectation is, more upside, now we can take a look and say, all right, we can enhance our trade by maybe buying the 65.70s for $1.65, that if it goes up to the $70 range, which wouldn't be outlandish, wave 1, wave 3, now we've got less money exposed and leveraged because we now have better confirmation that this pattern is likely to work. Jake, that is what everybody will be taking as far as their own risk-reward factor. Whoops, that's not what I wanted to do. At the end of the day, we have to calculate, should we be buying here? Because we've got a doji right here again at the resistance level. Stochastic's coming up. Do I buy today? Well, the market today showed it was still trading above the T line. We're not well in the overbought area, and it looks like it could probably trade higher tomorrow. Maybe I'm buying on the close that day. Or the analysis could be the Dow was off 75 points, not looking good. I'm going to hold off and wait to see if it opens positive the next day. Do you have a percentage of times a breakout continues up? Absolutely not. That's Again, we're putting ourselves in positions where the probabilities, again, are greatly in our favor that that breakout is occurring or is likely to occur. So the probabilities or the percentages are based upon we're in situations where the probabilities are greatly in our favor, that if we see it perform, we know that we're buy above the breakout. You can do that too. That just is added confirmation. That so if I didn't buy on this day and I'm thinking, all right, I'm not going to do anything until I see some positive trading tomorrow, yeah, maybe I'm paying up for a little bit, but my probabilities of it moving in the right direction has greatly improved. Okay, all right. So this is not rocket science. This is just taking a look and see what happened, what everybody else is watching. We were in NKLA. Now I was in NKLA calls because I had no idea what NKLA was until after it started moving big. That it was another electronic car company, but we made huge profits. We were buying calls in spreads right here, and the spreads I can't remember. We paid $1.05 for them, and a few days later we sold them out for I think it was $4.75, not waiting for it to go to $5. But that wasn't because we were any stock pickers. That was just because we could see what the pattern setup was that was putting us in a position to be in these strong price modes. Notice what happened here at this breakout level. I think I can even move this if I need to. Look what happened there. There was your best friend breakout again. But even if you didn't buy here, you could still be buying here. Oh, that's right. It was VTIQ, and I didn't know what VTIQ was, which does this setup in your experience usually produce a doji sandwich? No, it's the other way around. It's the expectation of seeing a doji sandwich that tells you that's confirming your price pattern. For the image before, what was the question? The confirmation of a doji sandwich is to close above the open of the previous day. Above the open. Are we on the right chart? We know what a doji sandwich is. It's a big bullish day followed by a doji. We also know what the doji rule is. The price will usually move in the direction of how they open after a doji, which allows you to make two assumptions. One, that if it opens positive after the doji, it's going to trade positive. And two, it's likely to produce the same magnitude candle as the day before the doji. So that allows you to pretty much calculate that they're not resisting here anymore. They're breaking out. So there is probably about 7 different things we're going to be looking at on Saturday that tells you that you've got a good breakout situation. If it opens up huge after a doji, no, you still use that as confirmation of a best friend signal. Let me go back here. You see how this gapped up through the resistance level? You still could be buying because there's your best friend signal. Gap up through a resistance level, trading positive. What do we expect from a best friend signal? Probably a very strong price move. Do we expect it to be this type of price move in one day? Absolutely not. But going back to that generic statement, not generic, but we're basically putting ourselves in positions where the probabilities of being in a big price move like this is greatly in our favor. So anyways, this is what we were going to be working on this weekend. A few weeks ago we were in nail because of the the scoop pattern breakout. Just puts us in the right place at the right time. Now a breakout could be a huge price move like this in one day, which obviously everybody's hoping for, or the same scenario where you get a big price move, but it may be the next move that's going to work consistently or produce a big trade. Okay, so let me go to live charts, but here's our training session for Saturday. It's advertised to be 4 hours. You'll be lucky if you get out in less than 5.5 or 6 hours, because we've got a lot of information. But essentially it's boiling down to identifying when a big price move breakout is likely to occur, but then on top of that, figuring out the best strategy to maximize your profitability when you do get a big trade. Do you buy immediately at the market open, or do you wait to get a better price using the 10-minute chart when you see a doji from the day before? Not to see if I'm going to get a better price. I want to see that they didn't open it and immediately start trading it lower. I want to be buying into strength. So if I see a doji gap up and they're moving it positive, then I'm buying. And I'm buying at the market. I'm not trying to because I don't know whether this is going to go up like it did 40 points in one day, or whether it's going to go up 3 points. All I know is that it's going in the direction that I want it to be going. So this is kind of alleviating having to learn formulas, or that's why we have a lot of other people come on and they show their trading systems. They've got trading systems that work well based upon what they've discovered through the years work for them or work as a system. This is just a universal generic analysis of price movements based upon human nature. So even if you're using somebody else's trading technique, put candlesticks on your chart and it will greatly enhance what you're looking at. So anyways, there's the link for this weekend. Now, we're not supposed to be circumventing our marketing people, but if you go ahead and become a member for $97 and then you get in for $297, you're at least $100 ahead. I see NKLA had a doji yesterday, and today, insider day, positive, opens gap up. Do you buy immediately, or how much time do you want? If you wait, it's about the range to buy. You can be buying based upon the fact that they haven't been able to close below the T-line. If it opens positive, you can start buying. But here's another trading rule of thumb. If you have a big spike like this, and then you hit levels where the sellers are now coming in, it usually trades flat for a while because now you have both buyers and sellers fighting in this area. The T-line is the 8-day exponential moving average. Here is the most powerful statement about candlestick analysis. If candlestick signals are the graphic depiction of investor sentiment, and the T-line acts like a natural Fibonacci support and resistance level of human nature, when you combine the two, you've got an extremely high probability trend analysis tool. I say high probability. I've been trading for 40 some odd years. I hate to say that, but I have not come across anything that has better probability setups than the T-line in conjunction with candlestick signals. So you're always buy near the top. No, not necessarily. Ron. Oh, on the scoop pattern? Well, the scoop pattern, you've got a couple places to buy. If you see kind of a flat handle, and it wasn't so obvious here, but you start seeing buying, you can either buy here and watch to see what happens at the handle, or you can buy here. So the probabilities of buying here is that you have a much greater probability of heading up versus resisting at that level. So your profitability is less, but your probabilities are greater. All right. Shouldn't a scoop have a flat handle? Pretty much. I was just kind of using that area, and that kind of acted as a scoop. Is that a kicker? Now, I'll show you some kickers here on live charts. All right, so here's the, again, this is going to be a full day training. This is going to be a combination of evaluating when a breakout is likely to occur, but then on top of that, we're going to go into what strategies can enhance the returns of being in the right place at the right time and greatly reduce the risk factor also. Zine, let's see, I don't know whether I've got, yeah, I got Zine in here, so hold on for a second. All right, everybody got all that information. Now let me go to the live charts. Bah, humbug. There we go. Whoops, still not quite. Hold on to your individual stock requests until I tell Jim to do the double line, and then try to limit it to one since we're going to be here late tonight. I usually use the market order because if I'm ready to buy, it doesn't matter whether I'm buying at $20.33 or $20.41 if I think that next price move is going to be a $7 move. And that has come from experience that trying to save 12 cents on a trade and missing the trade and missing out on a $4 move, it takes a lot of $12 trade better entries to make up for one $4 price move. If I'm ready to buy, I want to buy because I think that pattern is going to be working. How long are you going to hold it? It all depends on the, oh, you're asking Norm, all right. Okay. Do you ever use limit orders? Very rarely. Nah, I can't ever remember using a limit order. I use a lot of stop orders, but they're just stops. They're not stop limits. The reason for that is, let's say, just use this chart. Let's say I want to buy this stock at today's high, 29.54. So I put a stop limit, which means if it comes up through 29.54, I want to buy it at 29.54. So as soon as it hits it, that's the price I want to pay for it. Well, if it gaps up to 29.57 and goes this direction, I'm not in it because I kept my, I was only going to pay 29.54 for it. What would you trade? How, oh, I wouldn't trade this one. I'm just using this as the example of, it just happened to be up here. What about big spreads on options? Yeah, I use the limit orders there where I'm putting the bid in at the somewhere around the halfway point of that. Yes, so if I'm buying stock, yeah, it doesn't matter whether I pay $20 and, what did I say, 33 cents versus $20.40. But if I'm buying an option that has a bid of $2 and asking $2.60, I'm going to put the bid in somewhere around $2.30. All right, well, okay, so let's digress here a little bit. The markets today pulled back on the Dow indecisively. And I say indecisively, that's what the doji tells us. At the same time, the NASDAQ still stayed up above the T-line. So you got the NASDAQ trading up, you got the Dow trading down. What's that tell you about investor sentiment? It really hasn't changed. It's just shifting from sector to sector. Crude oil, as you can see, is still trading up. This is after hours trading, but notice the little scoop type or J-hook type pattern back up above the T-line. Stochastics coming back up. So the implication is, as long as it stays above the T-line, you can stay long, but you really want to watch to see what happens at this area to see if they can break out into the next wave. And if it breaks out in the next wave, where's your next logical target? This is wave 1. Wave 3 should take you up pretty close to the 200-day moving average. All right, so kicker signal. Here's where you put 2 plus 2 together. We were buying ABM calls on the close today. Because look where the kicker signal, and what's the most powerful candlestick signal? The kicker signal. Pretty much tells you there's been a dramatic change of investor sentiment. Now you add the fact, now you don't have to worry about stochastics or anything else, even where you are in a trend on a kicker signal, because it's strong enough to tell you there's been a drastic change of investor sentiment. It's going to trade positive. But now you add the fact that they gapped up through a resistance level with a kicker signal. What's the implication? They don't have any concerns anymore about this level. It's probably going much higher. A kicker signal, Joe, is part of your ABCs learning of candlestick signals. There's 12 major signals that produce very strong reversal signals. Now, there's actually 50 to 60 candlestick signals in the candlestick universe, but you don't need to learn them all. You don't want to waste your mental time and energy. If you learn the 12 major signals, basically 6 bullish, 6 bearish, but a kicker signal, notice how it opened here and closed here. The next day, meaning today, they gapped it up above yesterday's open, and they went in this direction. They basically have kicked investor sentiment in that opposite direction. And that is your strongest individual candlestick signal. Now you add the fact that they broke through a resistance level, implies that's not a concern anymore. A good idea to do debit spread for a kicker or just long calls? Both. If this started moving positive tomorrow and you're buying calls and it closes up here, now you've got a pretty good confirmation that maybe you want to buy the 42.50s and sell the 47.50s and see what the math is on that. That's a big factor of what we do based upon buying options or any options spread, is what is the math. If the math doesn't make any sense, you don't do it. The benefit we have with candlestick scanning is on any given day, we have 3, 5, 7, 10 excellent buys or excellent shorts. So if you've got something you can't make money with because of the math not working right, move on to the next one. No, FT, we're not trading the T-line. The first criteria of any candlestick analysis is what is the signal. Everything else is just anything else is just a confirmation. The kicker signal tells us we're probably could have a very strong uptrend. Do you have an updates mouse pad with signals? Both, Cheryl. Lou, again, you're not buying the T-line. You're buying the signal. The signal infers that that's why we identify a kicker signal. Everything else is just confirmation. You could take everything off this chart and just trade the signals and be relatively successful. It's the T-line that makes you more successful, stochastics, and then the other moving averages are what everybody else is watching. Jim, I don't know what the sound issues is. If you're having sound problems, if you go up to the very top right of your screen, there's a red X. Click on it, log yourself out, and log back in. You might get a better connection. You can do that too, and that's another strategy we'll be working on Saturday. That if you bought calls and you got big profits in calls, but you still think it's going up, but you're in extremely much higher risk, you close out, take your profits on the calls, and then maybe do a spread where you have less money involved, but if it still heads up, you still got the potential of making good money. No, Will, we're not worried about any resistance levels. We're only concerned about what is the investor sentiment telling us. It has nothing to do with what happened over here. It's telling you right now they want to buy this with great enthusiasm. All right, so the other one, again, what we're in is YY. There's your J-hook pattern. So somebody was asking where was the best place to buy a J-hook pattern. If you see a left-right combo, which is a doji followed by a bullish engulfing signal, you could be buying right here, or you could be wait for it to confirm by coming up through that resistance level, which would have been right about there. If you would have entered at end of day but missed it, would you set a conditional of a few cents above the close? That's usually what I look at, that if I was recommending this tomorrow, I'd probably say, all right, it closed at wherever it closed, 39.03. It was as high as 39.45. Maybe I put a buy stop at 39.25. That if it's still coming up in that direction, not just bid and ask right here at where it opened and closed, but that tells you the buying is still there. Confirm that kicker signal can cause the doji rule to fail because it's quick change in investor sentiment. King, I don't know what you're saying. Describe that better. Okay. All right. Guillermo, if you're cooking, we've got doji sandwiches, we got stick sandwiches. Oh, I forgot what the other ones are. Yeah, if you're a member, it's $297 versus $497. No, the mouse pads, Cheryl, have the 12 major signals. Now, we've got flashcard sets that have the patterns. They're usually about 30 or 40 in a package. One set is the candlestick signals. The other one is the signals and patterns. The doji rule didn't work. Are you looking at this one? I'm not sure why the doji rule didn't work. Oh, that's right, McMuffins. The doji sandwich. The doji on Tuesday and Wednesday almost engulfed in the doji. Yeah, so when this traded lower, was trading lower, what did it tell us about the 200? They weren't coming up through the 200 on that day. Today, the kicker signal said they were coming up. What is a McMuffin? The McMuffin is what turned this whole market around. A McMuffin is a morning star signal, and a morning star signal is a big down day, a day of indecision, and then the third day trades positive, closing more than halfway up this candle. That is your morning star signal, one of the 12 major signals. A doji sandwich is a big day followed by a doji. Then our simple doji rule is if it opens positive, it's going to trade positive, and the magnitude of this candle is going to be the same as that candle right there, or your doji sandwich. So if you've got a morning star signal and a doji sandwich, or your morning sandwich, that's a McMuffin. And the implication is the morning star signal is a major reversal signal. A doji sandwich implies there's going to be more upside. So you combine those two, it's kind of a double confirmation that the uptrend has started. Sean, we do have training videos in the members area, or I guess in any area, to trade options. And in the members area, if you're a member, we do sessions at night, like on a Tuesday night or a Wednesday night when we're not doing a Monday night or Thursday night session, on showing people how to use spreads, debit spreads, credit spreads, all that information. And we sometimes do a basic of option trading, the advantages and the disadvantages that you have to overcome. All right, let me get through some of these. These are all based upon breakout situations. You can see what was happening here. There was kind of a J-hook pattern setting up, and they broke through. As a matter of fact, they even broke through this little level. So we were buying this one today. So this is the difference. That looks like a morning star. Sean, there should be, if you're a member, there should be the videos in the members area that you can pick up. So there's a J-hook pattern. Try to go through some of these quickly. There was our kind of our bottoming action. Look at your kind of little doji sandwich breakout. This one is working. CDLX. There's your J-hook pattern setup. There was your J-hook pattern. There's your J-hook pattern. Which way is this going? There's an uptrending channel. So there's kind of your doji sandwich. You could be buying this one at positive trading, or you can wait for it to come up through that level. APPS is we're waiting for that pattern breakout. Again, what is our classic pattern? A classic pattern is your fry pan bottom. Notice where it broke out, right here at the 200. Pulled back. There's your buying again, a doji followed by a bullish confirmation. And we're sitting right here. I don't know what that is. Let's get rid of it. So if this comes up through this level, what do we got going on? This is called the classic pattern, which is a fry pan bottom, produces a strong price move. The prerequisite for a J-hook pattern is a strong price move, followed by consolidation, and then the next wave. If this is wave 1, this is wave 3. So if we see this come up through this level, you can be buying immediately, because that tells you wave 3 is going to be approximately that same magnitude, with a high degree of probability. Oh, I've kept us way over time, and we're not even through the ones that we've recommended. NVTA. That still hasn't broken out. Yeah, it had broken out earlier. And Vivo. There's your fry pan bottom. Look where it is, right smack dab at that level. So what's our trading strategy on this? You've got a shooting star, indecision, you're right here at this level. If this opens lower, if you bought down here somewhere, look at our doji sandwich, we expected it to break out through this level. If we get sell signals here, what's it telling us about our breakout? It's not there. You close out the position. And Chegg, there was our doji sandwich breakout. You can see how it broke through this downtrend. They gapped up. So you have a doji sandwich, best friend. Didn't confirm today because it opened lower and traded lower. So where's a very logical place to buy or put a buy stop? Probably right there. Logic says if it comes up through that level, this whole pattern, wave 1 and wave 3 is now in progress. I'm going to go through these real quick because everybody will ask about them. Tesla, you just stay long. Look at the bullish engulfing signal that kept it up above the T-line. Amazon, nothing wildly exciting, but it's in a slow, steady uptrend, which gives us the, at least the, impression that even though Amazon might not be strong, they're still buying it, which means investor sentiment in the markets are still good. Apple, all you can do here is stay long. NVIDIA is having a hard time getting out of its own way. It's stuck right in here. I wouldn't be long or short NVIDIA until it can break out to a higher level. And Netflix, you can see the pattern setup. And notice all the buying that occurred, buy signals, bullish harami right on the 50-day moving average. Where is this one heading? You want to see what happens once it gets up to this level. Hold on to your individual ones until I tell Jim to do the double line. All right, so the breakouts. Look where Wix is. Right there. On a fry pan bottom J-hook pattern. If it breaks out, where's your next likely move? Wave 1, wave 2, going into wave 3. So these are setups that are going to produce extremely high probability trades if they can break out through the resistance level. ATVI. If this opens positive, what do you got going for you? A doji sandwich telling you this level is not acting as resistance. Now you're in the next wave to the upside. Uh-oh. How can I not read my own handwriting? Look where this one broke out. Right there, you had a doji. If it opened positive, what was happening? You were breaking out. You weren't in this trading range anymore. Just visual confirmation, knowing what should happen after a doji. If they aren't in this resistance, you kind of have a slow curve breakout to the upside. Again, just basically putting yourselves in situations where knowing what the patterns are doing, where the breakouts are occurring. So you could have either been buying here, that broke this little downtrend above the T-line, gapped up through the T-line after buy signals, or you could have been buying today as it broke out through the J-hook pattern breakout level. Zine, that is what we call a bobble breakout. Kind of a doji sandwich with a huge up move. Came up, failed at the 200, pulled back. There's your little scoop pattern. This you would expect more upside. CHD, broke out. Telling you you're in the next wave. Spotify. Look where it broke out. What's that tell us? You're in wave 3. NLS. Look at the slow curve. Look where the breakout level was. What's this tell us? We're still heading up on this one. We did Zine. PCTY. Or did we do Zine? Look at your Morningstar left-right combo. Now your kicker type signal. This is called a trend kicker signal. You were already in a trend. It opened here, closed here, gapped up, and went right through this resistance level. What's that tell you about human nature or investor sentiment? They don't care about that resistance level anymore, which means they're probably going much higher. Another breakout on IC. Now these are the type of things that are spotted pretty early or pretty quick in the chat room each day because somebody pointed this out when it was still trading in this range. Why was PCTY a Morningstar signal? Did I say Morningstar? Oh, it just has Morningstar characteristics. Big down day, usually the doji is down here, but you had a left-right combo. So it still looks pretty symmetrical. Ovid did a breakout. There's your best friend. Now, is this too high to chase after? Well, that's the advantage of knowing what to be looking for. That probably tells us with the best friend signal, you're probably going to have a 45 degree off of here. And Neti, this is what we call a message. Notice your breakout. Fry pan bottom, this told you there was a new investor sentiment coming into this this price move. Now, can you always expect a pop-up like this? Heck no. But if you happen to have bought here, you are taking your profits pretty quick up here, especially off your 10-minute chart. But what is this? This is what we call the message. Even though that's an ugly, dark candle, it pretty much tells you there was a message here. They were buying. There was profit taking. Now what's our signals tell us here? The profit taking's over. The message told you there was a lot of new interest. That's when your next uptrend starts. And Roku did a nice fry pan bottom, broke out through this level. I would suspect it's at least coming back up to test this level. You've shown several big day breakouts. Does the volume of shares usually make a difference? More than not that it makes a difference. More than likely, the volume will be big on those days. Now, we don't trade based up on, a lot of people say, well, I want to see the volume go up with the price going up. Volume and price have absolutely nothing to do with each other. However, if you happen to see a day, and there was one, and I can't remember which one it was, but if you happen to see a day like this, and there's a big, huge volume spike, then you can pretty much assume that there's been a lot of change of ownership, which usually means that's where the smart money is buying and the panic sellers were selling. Is it a McMuffin? Not really. That's that's not really a Morningstar signal. But it's the same implication though. You had inverted hammer, doji, gap up. That tells you and you can see the trajectory. There's your fry pan bottom. JB, I don't think that comes up over here. Well, maybe it does. What is that, a warrant? Must be a warrant. Same scenario, the profit taking's over. You could be buying this one on positive trading. Yes, Jerry, the only reason I've been showing long positions is because there's so many of them right now. You can do the exact same thing on identifying the sell signals. There's our bearish kicker signal on PS. We're still short some of this. I closed half that position here, but notice it's never been able to get back up above the T line. There's your dark cloud, one of your 12 major signals. Okay, let's see. I don't have volume over here, but that would be a case where maybe this was it, where it had a big volume spike on this day. That tells you there's been a change of ownership. You look to see the usual daily volume before you act on a big volume day breakout, not how much trading on a big day, but usual range, suppose. AB, that all shows up. Now, I don't have it on these charts, but on my other charts, I'll have volume and stochastics on the same chart. So if on this day, if the volume was averaging somewhere around in this range, then all of a sudden you saw a big volume spike. Yes, that becomes another fluffy to say there's been a change of investor sentiment. Okay, so a lot of the details we were going through as far as identifying when a breakout is likely to occur. That's why we did the mini session 2 weeks ago, so people could get mentally prepared and start identifying them. Now, on Saturday, we're going to be going through what a breakout situation setup is. We're going to refresh everybody's memory. We're going to go through which option strategies are available to keep your option trading simple. And then we're going to combine the two to say, all right, what's the best methods for applying option strategies or buying stock and options on a big price move breakout, so that you're, again, minimizing your risk but maximizing the potential you can make based upon the expected price move of that breakout. Okay, so are there any general questions on candlesticks? Okay, if not, Jim, go ahead and do the double line. Oh. And in 3.1 seconds, do the next double line. All right. Okay. Now I got to see where. Oh, this. Now there was the first double line. Okay, I'm going to try to go through some of these very quickly. ANLY, you stay long. Your bullish engulfing hammer signal broke this downtrend. Just stay long on this one. Oops. Valero, nothing here yet. I wouldn't be short, but I wouldn't be going long until it comes up through the T line. ABBV, you just stay long on this one as long as it stays above the T line. Booking, right now I wouldn't be long. If you're short, you stay short, but you use the T line as you stop. It shouldn't come back up through that level. Square, after the bullish engulfing little scoop type J-hook pattern, you stay long on this one. Restoration Hardware, another one that has to open positive. No, it did close positive. I'm colorblind. You could be buying this one, or you stay long. You want to see it break out through that level. Getting all these. Lulu, nothing. Wouldn't be long or short this one. No direction. Ping, there's your doji sandwich breakout through this level. That implies you're going to have more upside. Workhorse, just stay long as as it stays above the T line. Work still looks like it's going to come up and fill this gap. Got a nice bullish signal coming back up above the T line. Look for it to go to the $38 range. FedEx. FedEx, you can stay long on this one. Don't let it come back down through the T line. Watch to see what it does once it gets to the 200. IAC, nice J-hook pattern, double doji setup. Stay long as you don't see a sell signal. EPZM, a long-legged doji. Makes it very simple. If it opens lower, you close it out. It needs to open positive and trade positive. Oh, and if it's not the best looking chart, go someplace else, Gary. Don't even, there's other charts where you don't have to have such a questionable situation to whether to get back in or not. Cliffs, this one you should be out of, or you could possibly be going short with that kind of gap down, making the 200 or the 50 your next likely target. Micron, nothing. If you're long, it has to open positive. But right now, that's not a good-looking chart. I'd be someplace else. We did work, right? Work is going to the fill the gap at the $38 level. LSPN, there's your breakout again with a bullish engulfing gap up through the resistance level. You stay long as this stays above the T line. Chipotle, nah. A scoop pattern, you won't even have to question whether it's a scoop pattern. First of all, it's not a real flat handle. Chipotle, I probably wouldn't be long or short. There's just no direction in that one. Any tips on getting in early? Wake up early. Oh, man. Beat the traffic. Yes. Let me find one that I can. Square. You just stay long. Another J-hook type pattern. There's your bullish left-right combo. You can stay long on this one. 3D wouldn't be long or short. If you are short, you can stay short, but that's really a nothing sideways chart. I'd be someplace else. An NBSE. You stay long. Remember, the bigger the breakout, the more compelling there's going to be more upside. But you're in the overbought area, so your safety stop is right here at today's low. It shouldn't come back through that direction. CFFA. Make sure your volume, it looks like a low volume stock. That's a toughie to trade because of the whipsaw action. And it's not a very big percentage mover. If you're long, you can stay long. It's just not a good trading stock. DSLV. Silver, inverse silver. Means silver must be heading down. You can buy this one. Silver is heading down. Gold is just kind of sideways. Former 522. What's it? AEVL. Nothing there. So let's say 522, somewhere in here. I don't, yeah. Steve, I don't remember what that was. Sabre, right now nothing. You should be out of this one. Trading below the T-line. Twillo. Stay long. It just went through this level, so you stay long as it stays above the T-line. AFH. This one with the breakout. You can buy this one on positive trading. If I was buying on positive trading tomorrow, then I'd have my stop just below today's open. Because if it opens positive and comes back down through there, they're selling still. SGMS. If you're long, it needs to stay above the T-line. If this opened lower tomorrow, I'd closed out. You can see where the sell signals were up here at the 200. You don't really have, to stay long, it's got to open positive and trade positive just to keep you above the T-line. Cena, if you're short, you stay short. There's nothing on this one that, yeah, that's not a pretty chart. I'd be someplace else. This one you can get ready to buy. There's your left-right combo. There's kind of your double doji. If you're buying this one, it's kind of broken this downtrend. Now you just want to see if it can get up through the 200-day moving average. Codex was a perfect example of why you want bullish confirmation. There's your left-right combo. Had this opened positive, you would have been a buyer. The fact that it opened lower told you you don't want to be buying it yet. That's just kind of the common sense aspects of candlestick signals. It's telling you what's happening in investor sentiment. And so you wouldn't be long or short this one right now. Yeah, I think we looked at this one. No, there's nothing there as far as a scoop pattern. Bosch. Mornings or a bullish engulfing right off the 50. You stay long, obviously watch to see if it can get through this level. If it does, it's more than likely coming up into the trend channel, which means you're probably heading toward the 200-day moving average. Dust. Nothing of any great consequence here, and this is because gold is moving sideways. I'd be someplace else right now. There's no direction. Bill has finally come back up. It did kind of a double bottom with the bullish engulfing left-right combo. Now you stay long as it stays above the T-line. Wayfair was at the breakout level. You can still buy this one on positive trading because there's your fry pan bottom breakout. RNWK. Nothing great yet. You do have a bullish engulfing. If it opens positive, you can start buying it, and then you put your safety stop just below the T-line. Inverted hammer, doji, hammer, bullish confirmation. You can start buying this one if you like it. I would think it's going to come up into this area or getting you pretty close to the 50-day moving average. Vive, just stay long. Nothing wrong there. Boeing, nothing right now. What usually happens again is they have a big spike up like this, pulls back, and then just moves sideways. I'd be someplace else right now, Cindy. The 34 usually is a good indicator. I mean, it's not your major support and resistance levels. That's a ping we did, broke out. But the benefit of candlestick analysis is we know the signals work or they wouldn't be around for 400 years. That means you can put anything on your chart that enhances your probabilities. But theoretically, or actually, I could take this off, I could take this off, I could take this off, and trade very successfully with stochastics and the T-line, because the major criteria is the signal itself. There's your kicker signal. What do you expect from a kicker signal? A very strong price move. The airlines have fizzled. Again, there was that spike up, now they're moving sideways. So you don't want to be in the airlines right now. Zynga, not your best looking chart, but it's trying. At least you know you're in an uptrend. If you happen to be long, you can stay long as long as it stays above the T-line. DFIN kind of fizzled, and it doesn't come up over here, Catherine. I don't know why. Everything else does. And I don't know why that one doesn't come up. DPST. No, for some reason, those don't come up. I don't know what that one is. CB. T2, you just stay long. The kind of little J-hook pattern, and you're above the T-line, you just stay with it. Nothing on NRGU. Major Forex. I don't know what that means, King, but yeah, it works just so well on Forex. You won't get the gaps because it's a consistently traded entities. Bidu, not a great chart, but basically, as long as you notice what it did when it came up through kind of the bobble breakout, what they do is they come right back to test to see if the resistance level is going to act as support. If it acts as support, that becomes a very strong buy, and you can see what happened. You kind of had a little doji gap up telling you they were supporting. That usually implies there's going to be, everybody's now confident that it's not trading off because it's supported, and that's where you get some very strong price moves. TBIO, another one that you can buy on positive trading. Look at all the indecision down here. Inverted hammer, doji, 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 left-right combo. Now you're closing above the T-line. You can buy this one on positive trading. And Gush, probably wouldn't be long or short. TGTX, you can stay long. Again, a left-right combo, another left-right combo. You can buy this one on positive trading. You'd definitely like to see a strong bullish candle taking you up. MAC, nothing. Would not be long or short. Again, look at the spike up, then the selling. You're going to probably go sideways for a while. Apple, we did. Apple is a slow, steady uptrend. Clo, bullish engulfing, J-hook type pattern. You just stay long as this trajectory stays above the T-line. Lulu, you could short this one on a lower open because that would give you a bearish left-right combo and then a bearish doji sandwich, making this your likely target, first target, second target. Then there's a gap to fill down here, so you could short this one on weakness. AMD, nothing. That's a nothing chart. I would be someplace else. Royal Caribbean, another nothing chart. Notice where the profit taking occurred. When they gap up in the overbought condition, start looking for your sell signals. That's the normal human nature of buying exuberantly at the top. NIO, another one where you just stay long. As long as this stays above the T-line, have a safety stop below the T-line. Starbucks, probably wouldn't go short. It's just an ugly chart, but it's not showing any great weakness. Yeah, it wouldn't be one of my first first choice is to go short. Basically, I wouldn't be long or short that one. All right, so there's your next breakout. You stay long, but here's your logic. Anytime you start getting up in the overbought area and you start moving away from the T-line, keep your safety stop at the previous day's open. Just simple logic that's going to be beneficial a high percentage of the time. This one, nothing right now. Again, look at where you kind of had a fry pan bottom, a J-hook pattern. Wave 1 and wave 3 are about the same. Where do the Japanese race traders say to start looking for sell signals? When everybody's exuberantly buying at the top. Look at your shooting star type signal. When they gapped it up, that's when you start taking profits. Where do you think the first target's going to be? Back here to the T-line. Right now, wouldn't be long or short this one. Norwegian, another one. Wouldn't be long or short. Those have gone dead. Hess, same thing on the oils. They've kind of gone dead. They're going sideways. Would be someplace else. Facebook is just moving sideways. If this didn't open, if it doesn't open positive tomorrow, I'd close it out. You can always buy it back when it comes up through that level. Tyson, nothing. No direction. I'd be someplace else. And Neon, big breakout. Now, one of the statistical studies we did one weekend is if you get a big move like this, if you're long, you want to see it open positive and trade positive. If it opens lower and starts trading down, close it out. You can always buy it back when it comes up through this level, but if it opens lower and trades lower, there's a big probability, 90% or better, that you're not going to head back up until it comes back up through that level. This one you can get ready to buy if it opens positive, but you definitely want to see some strength, giving you kind of a J-hook pattern. Otherwise, after the big spike up, it might be flat for a while. Is this a 3-month chart? It doesn't really matter. I don't make my chart so I can see what's happening over here, whether you want to make it a 2-month chart or, I just want to see what's happening here. Now, if I'm buying here and I want to see what happened in the past, then I can make the chart much smaller, and you can see what this one did. Broke out of that fry pan bottom, but never been up in this level, obviously. Seal, J-hook pattern. Make sure your volume is good on the spray stock, but you can see the J-hook. You can see the fry pan bottom, classic pattern. Fry pan bottom, strong price move, J-hook pattern, prerequisite, strong price move. Look at all the dojis right here on the T-line. We did work. Work's going to the $38 level. MDB. This one you can buy on positive trading. Also a J-hook pattern setup. TBIO, we did this one. You can buy in positive trading. LH, I'm taking it as LH, not lean hogs. That's a nothing chart, just going sideways. And Boeing, just going sideways. So anytime you see a chart that's got a pattern to it, you can go after it. Anytime you see a chart not doing anything, move your money until this creates another pattern, which could be next week, Could be next month. Bill, yeah, there was your Morningstar signal. There was your bullish engulfing. So it's not anything that, I mean, it just works as a good indicator. Again, you just put anything on your chart that's going to enhance your probabilities. But the main criteria is the signals themselves. G dot, just stay long, as long as it stays above the T line. And we did seal, right? And we did TBIO. What screen is this is CQG, which I don't recommend unless you're trading everything, futures and commodities, currencies. It costs $1,300 a month. You get just as good graphics on Metastock, because I think Metastock uses CQG as their feed. Phil, on ABM, you just wait to see what happens. Now, there wasn't any way to know this was happening unless somebody in the chat room said, look at ABM, it's gapping up, and you see that it's doing a kicker signal. If I see a kicker signal forming, I'll be ready to buy immediately, which basically means I go to my 10-minute chart, might be buying here, might not be buying here because it's selling, but might be buying here because it looks like they're staying above the T line. Wouldn't be buying here, but maybe buying here because it tells me the strength is still there. But I'm more apt to be buying when I see the kicker signal. IVR, nothing. Want to be someplace else. Whoops. Into seal. If you're buying it, you buy on positive trading. Then you put your stop right here, because if it opens positive and trades back down below this level, what did it tell you about your breakout? It didn't break out. You close it back out. PayPal, just stay long. Look at your little bullish engulfing that kept your uptrend going. We did Apple. We did FSLY. Whoops. Thank you, Tim. Whoops. Boeing. It just doesn't have any direction on Boeing. We did FSLY, all right. FSLY. You stay long, you have your safety stop at today's open. And lows, slow J-hook pattern. Where's your likely target? Probably coming back up into that trend trajectory. All right, everybody. Markets in general are not really going in any great direction. That's why you want to take advantage of the patterns. So with that, everybody have a good evening. We will see you bright and early in the chat rooms. We'll see you then.